Well, the earthquake in Japan sent oil prices sharply lower this morning. We are joined this morning by the B of A Merrill Lynch's head of global commodity research, Francisco Blanch. Francisco, thank you so much for joining us.
Thank you for having me.
Really appreciate it. Certainly no bigger apropos time than now to talk with you about this. Give me the psychology of why oil prices plunged like this with this event in Japan.
Well, I mean, I think, look, I think there are several refineries that are affected, and refineries obviously take crude oil. It's also going to have an impact on economic activity in Japan for a number of months. So I think the short-run impact is Japan is going to consume less energy, at least over the next few weeks. Now, the longer-term impact, of course, is still unknown, and it looks like several nuclear plants are down, and we still don't have the full information, of course. It looks also maybe some hydroelectricity might be affected. So I'd say over the coming months, we probably will end up needing more thermal fuel in Japan. And I think potentially more oil and
so that would mean more demand
fuel.
for oil.
Yeah,
that it'll come back.
Over a month or so, you'll see more demand coming back. But in the short run, remember, Japan is paralyzed, so no one's driving, no one's going anywhere.
An enormous oil importer, obviously. So if they come at a standstill, then of course that would make sense then.
Of course. So the initial reaction, I think, makes sense. Demand softens up pretty sharply on the back of this event, and then, of course, prices come down, right? But
this oil price, or the oil markets, it seemed to have wanted to go down. Did it not in the last 48 hours? Am I wrong on this?
Well, we had a bit of a pullback yesterday on the back of economic news in Europe not being particularly great. We had, of course, Spain being downgraded by Moody's, Spanish sovereign debt. The economic data generally wasn't as great as the market hoped. But we also have this day of rage going on in Saudi Arabia. And there's so far little information as to how that will affect the market. And remember,
so far it doesn't seem to be as big of a day of rage as some had expected, though.
Right. I mean, it doesn't seem to be as big. Of course, the news yesterday of police shooting at demonstrators in Saudi.
Or shooting in the air, yeah.
Or shooting in the air, yeah. Didn't really come through into the market until later in the day, right? We'll see. We have a few hours to see how things play out.
Right, Francisco. Now I know you revised up your forecast recently, just a few days ago. I think you revised Brent crude futures up to 122. Is that right? Okay. So do these what's happened in Japan and now raising the specter of demand destruction, lower demand? Does that make you rethink the revision up that you made on oil?
Well, look, we have to keep on pricing the information every time. But I think the important point to remember, we have an average of $108 a barrel for the year, even if Japan is a little bit softer throughout the month of March and maybe early April. I think at the end of the day, the demand picture globally is still holding up reasonably well. So we are comfortable with the numbers that we've put out so far, on average for the year. Maybe the second quarter comes in a little bit softer, but I think the average number 108, which is our average Brent crude oil price for the year, 101 for WTI. Those numbers should hold, I think.
Is there a floor right now for oil at all?
Well, oil has been on a path of demand destruction. So whenever you're on a path of demand destruction, if demand starts to get dented, you come down pretty quickly. Remember, global demand was running at a rate of 3.4 million barrels a day, or 4% year on year in the fourth quarter. As we came into this quarter, obviously demand globally for oil still running very, very strongly. And then we had the Libyan 1 million barrel a day plus supply shock. So the combination of that pushed prices to that level, 115 or so, 115, 120. Now, it depends a little bit on how the Middle East plays out. I still think there's a big psychological impact of how this whole Middle East crisis and North Africa crisis ultimately ends up sorting itself out. And I don't think it's going to be over in a week. I think it's going to take a little bit of time to get that settled.
Weeks or even months. And I know at this point, I think the Libyan oil production has now dipped below 500,000 barrels a day. So it's really gone down and down. Right. Are the oil markets okay with this missing production of Libyan oil? I mean, have they settled with it and made peace with it, I guess you could say, that perhaps we will no longer have that production, at least for the foreseeable future?
Well, I mean, we've penciled in a 6-month supply disruption from Libya with things starting to get a little bit better by the end of the year. And getting close to full production volumes by 2012, and I think that's where the market is probably right now. Looking at Libya coming mostly online within a year and a half or so, but you're right, it may take a little longer. It looks like there's a strong struggle between the Gaddafi forces and the rebel forces, and it's hard to predict what the outcome will be, and it might be a protracted civil war. And if that is the case, then I think the market is going to have to rethink, because Libya is a very large supplier. So produces 1.6 million barrels a day of oil, right. A lot of it light sweet crude, feeding the European refineries in Italy, in Spain, in France, and that has left Saudi Arabia quite vulnerable in terms of their spare capacity. They are ramping up production very quickly. They claim they can produce 12 million barrels a day, a little bit more than that even. But we know they're probably already above 9 million barrels a day.
So they're stretched out.
I mean, it's hard to tell because we don't know. I mean, the highest number they've ever produced in the past 10 years has been 9.7 million barrels a day. So, we're already above 9. Certainly, the softer demand in Japan for the next month or so is going to put some pressure on the price. But